This is the Chapter 3 overview. Please remember that this video overview is to give you an idea of what will be covered and what you should focus on in Chapter 3. It should not replace reading the chapter for important details or completing any activity. Chapter 3 focuses generally on taxes. They are not popular, but we all need to pay them. We need to know how to calculate them and how to minimize your tax liability. Using tax software such as TurboTax makes it simple and gives you a digital record of your taxes. Sales tax is unavoidable. The tax we should be concerned about is federal income tax, and that is what we'll focus on in this chapter. You have to decide which form to use first. The 1040-80A must be used if you have an IRA contribution. If you have no contributions, you'll probably be able to use the 1040 Easy. One of the terms in this chapter that you need to become familiar with is adjusted gross income, commonly known as AGI. To determine adjusted gross income, you take your gross income, which in the green box on the screen could be any number of things. Primarily for most of us, it's wages and salaries, but it could be a lot of other things, as you can see on the screen reading through this list. You subtract your adjustments to income, and this equals your adjusted gross income. So, in other words, you add any interest, as you see in Jamie Lee's example. She added the raffle prize she won, and she subtracted her IRA contribution to get to an AGI, adjusted gross income, of $32,500. So that includes everything that she earned that year, plus any winnings she had, any interest she earned off of her accounts, because she has a small savings account, and then subtracting her IRA contribution. Taxable income comes from that AGI, so you have to calculate that first. Subtract your exemption. If you're single by yourself, you'll have the one exemption. This amount changes not every year, but it does change occasionally. And then subtract your standard deduction, unless, of course, you're itemizing. But we're assuming with our example, Jamie, she's a college student, and so she just uses the standard deduction because she doesn't have enough to itemize. And this gives her her taxable income of $22,350. Everyone has those two deductions, exemption and a standard deduction. Then to calculate her tax liability, what she owes in taxes, it depends on how much she's made. Her taxable income was $22,350. So the first $9,075 of her earnings is at 10% rate, and then in the next up to $36,900, which is where she falls, is 15%. It even gives you there her average tax rate. And there's her liability. The way they found that, and we're going to use a spreadsheet. Click in cell B2. The first $9,075 is 10%, so equals $9,075 times 10%. Then we need to calculate, first of all, the difference between $22,350, her taxable income, minus the $9,075, and that we calculate at 15%. So if you auto sum that, I didn't mean to auto sum that, I need to add it, equals this one because we don't want to add the taxable income in there. Is $2,899 is her tax liability. One of the things that the textbook will cover in this chapter that we'll cover is some tax strategies to lessen your tax liability. Of course, home ownership is one of the biggest, and that is one of the best tax shelters. Deduct interest on home mortgage and deduct your real estate property taxes. Charitable contributions is another. IRA contributions maximize using that, and the Keogh retirement plan for self-employed. If you're self-employed, that is another good tax strategy to use. Again, be sure that you read the chapter and do all of the activities to learn how to best use these. Many of these strategies you'll be able to use and implement in your life immediately. Some of them you probably may not be able to use until you get out of college, but I hope that you'll remember them because it will really save you a lot of money in the long run. End of this video.